All right, so welcome to India Market Review Part 2 for the week ending Friday, 8th September. Part 1, we looked at the Indian market as usual from all the sectoral and global index perspective, but we also did a very quick review of the market from a fundamental perspective and spoke about what various scenarios could be and looked at how quite how shall I say this, differentiated the various sectors clearly were. Some quite bullish, some quite bearish, and others, just consolidating sideways. And with that, we'll now look at individual stocks in this IMR. As I was doing a review of the individual stocks earlier, and also based on the part one that we saw, I said, okay, let's look at the Nifty next 50 stocks, but we'll also very quickly look at some large cap stocks and just review them where they were. So a couple of them before we get into the Nifty next 50. So one is Reliance. Right. Oops. Okay. So my data has not been adjusted. So Reliance went ex bonus 2 days back, and right. So I'll do this later. But essentially, it is very close to its life high on an adjusted basis, and if it does do a breakout, which it probably will at some point, maybe a quarter down, or waiting for the quarterly results or something. There have been quite a few fundamental upgrades on Reliance in the last couple of weeks. As usual, these upgrades fundamental come way late in the sense that, the stock's already moved 50, 60, 70% from its 1000 rupee levels, which we did make a call for sometime a few months back, and then now the upgrades are coming. Technically, fundamentally, this is how things usually are. Technicals give you signals way ahead, and then the fundamental guys come back and sometimes weeks, and in this case a few months later, and say, oh, upgrade. And yeah, and the better part of the up move has been lost. So upside still left. Looking at L&T, because that was the one which triggered the up move on the capital goods index. So this is one stock which has, after consolidating almost 6 months, seems to be moving, and there's tremendous volume on it today. So this is probably a trade that one can definitely look at in the coming week. It clears 1200, then definitely much higher levels at 1250 is, I think, a given. But really, once this level breaks, which is at why is that there? This level breaks at around 1250, then 1400 is quite possible on L&T. So that's a stock to look at, right? And see if there is something that you may want to do. This had also gone bonus. That's why all these lines are the way they are. 1 second. Yeah. All right. So 1250 breaks, and after almost 4 years, 5 years, that will be a big breakout. And who knows, maybe it'll go back to its life high. Remember, these are weekly charts, and so all these views are for the next few weeks, even months, and not days. Right? So that's something that is significant. Right. Was there anything else that was outstanding? No. All right. So those are the two that sort of stuck in my head from the large cap side. Not that others are not there. Some others which we had given, if I remember, a view on Ambuja Cement was one of them. Sort of triple top breaking out. Not really broken out, but clearly it is trying to make a new life high. Double top tentatively broken. I do believe that you will get perhaps a burst of activity which may happen. This is a daily chart, sorry, weekly chart. Remember, here is the daily chart, right? So very sort of just grazing there. 285. Not sure when to go, when not to go, but I think the signs are that it's probably going to break out at some point. Maybe 300 is not maybe 300 is in my opinion, quite likely on a very short-term basis. But for people who can hold it longer term, this is a 2-year consolidation which is breaking out. So if you think about it, it's from 200 to 300, almost 100 rupees. So, 400 rupees stock in 1 year, who knows? That's almost a 33% return. Very, very much possible, right? So there you have Ambuja, one of the stocks I remember from the last IMR where we had given a strong call. All right, so now coming to the mid cap side, because that was the one which showed a lot of strength, as we saw the Nifty was sort of lackluster, and the mid caps were doing much better, and starting well, sort of in a alphabetical order as far as sectors are concerned. Looking at auto first, Ashok Leland, life high, quite literally, and on good volumes. And this is a life high which is coming after a previous life high of 2016 has been broken. A lot of intense competition going on in the auto sectors. So that is in the heavy vehicles space, and in spite of that, this has done quite well. And I do believe that 150 on this stock is definitely possible. Already gone from 100 to 115 by all parameters. Technical, looks like it's going up. A little bit of a concern as far as indicators are concerned and the daily charts, but nothing on the weekly chart. So short term there might be some iffiness, but long term this is likely to go to 150. If you are a trader, stop loss is below 110, 109, but otherwise for anybody willing to hold 125, 150 is I think very, very likely. All right, Motherson Sumi, another big ancillary player in the mid cap space, and this is been consolidating for some time. We'll have to see what happens to this. But looking from a longer term perspective, this also is looking quite bullish. 4 months of consolidation. The weekly chart, very small. Actually, this whole move 217 to 330, right? I would say let's look at volume. Right. So this is the volume indicators, OBV, PVT, and definitely OBV is showing a lot of a strong longer term buying, I think. That's my interpretation, and looking all good. And sometime PVT might break out of its high here, and that will be one more validation. But for a long term person, or rather when I say a long term investor, a break of 340 could take this definitely much higher, right? Okay, looking at Shree Cement. So along with quite a few of the large cap cement stocks, this one also beginning to break out. Definitely an opportunity for the coming week. Shree Cement breaks 18,700, then 20,000, then 20,500 would be the next logical opportunity. 2-3 months of consolidation and a breakout, I think, is quite well on the cards, right? All right. So So you could go long on this. 20,000, 20,500 is definitely a possibility. I think stop loss, if you're really keen on getting out, is honestly actually below 16,000, 800. But if you really want to have a tight one, then maybe somewhere around 18,220 is where you could put a stop loss. But once this breaks, I think it'll more likely to go up than down. Looks like some accumulation and movement towards that is already happening, Realty coming to DLF, so that's the major player uh, in the heavyweight in the realty index. And well, though it has really not broken out of its life high, not life high, multi-year level there, I do believe in the longer term it is heading there. It has broken from its multi-year downtrend, made an up move which is quite substantial, and we have spoken about it a lot already in the last few months. There was a deep correction here, and right now the again this move really happened on not anything substantial volume, and now again volume has happened. It's been built up, and accumulation definitely happening. Just a question of breaking 200 and psychological mark 200. Brad breaks, then perhaps further up moves again. Uh, you could get a breakout from this sort of a consolidation, a little bit iffy, but again, it's a long opportunity, definitely not short. Now coming to mid-cap FMCG stocks, some of them, of course, not all of them. Starting with uh, Britannia, well, sitting at a verge of making another life high. What a stock this has been. So after moving out from 3,500, hitting 4,300, this is, I would say, more like a flag. Let's see how the volumes are. Yep, moved up, sort of a flag. And for a patient person, then I think a move of at least from 4,030 to 4,300 rupees. So 4,700 next few months is looking quite, not few months, I would say few weeks is definitely looking possible. This one has already, this breakout just went from 3.8 to 4.1, just like that. You could definitely have something like that happening again. Right? We just have to wait and watch. Okay, so that's Britannia. One thing that has broken out, Colgate Palmolive. It's been doing that last 2 days. Nothing great in volume. Mostly looks like a technical breakout. Came back, tested that sort of 1,040 level, which was a 2-year support zone, and then now it is at 1,150. So basically almost a 10% move. And I do believe that further upsides are possible. A trader can put a stop loss below 1090. 1,200, 1,250 definitely happening. And this is 105021, so 60, 17. Okay, 111. That's 1250, and probably higher are definitely possible. Look at this on a weekly chart, and you'll appreciate the 2.5, almost 3-year consolidation and that breakout that's happening. Sort of, if you can imagine and stretch your imagination, it's like a, what's that? Seagull, wings, body, wings, and breaking out, right? And you can see, especially here, how in the first part of this year, a lot of buying was going on. It was at around 900 rupees there. Now it is at 1,150. Right, so 250 rupees, and further upsides are quite likely. Next, looking at Dabur. So this is very keenly set up at it's sort of a double or even a triple top. Here July 2015, then here we've got July 2016, and well, we are in August, September 2017, and again looks like build up. You're looking at the volume indicators, nicely set up, long term, everything in sync. Just a question of when does it break out, in my view. Let's move to daily. So short term, some wait and watch happening. You can see how volume has dropped in the last 3 months. could come to those levels. It is almost at those levels, right? All right. So somewhere at around 300, psychological mark 306, it is where it is right now, right? 300, 297, really tough to give a stop loss. It's this is like a nice long consolidation, right? You can also see that in the volume picture, typical, right? Uh, Not as neat as it looks here, but you can see that here too, right? The breakout not yet happened, but I think it is setting itself up for that. And 320 goes 350, 400 could easily happen. Definitely no shorting at 300, definitely at 290, 270. If it does go there, you should be buying it. Moving on, looking at Imami, another one looking at threshold. Again, two and a half year sideways move, very much clear in the weekly chart. Really just a question of when does it move. Some interesting trade happened here, big volume, some sort of accumulation, didn't really go up. Was it some insider trading, any or FII or institutional? Don't know. Can't say when it'll break out, but A, B, C, D. But yeah, it's again setting itself up. You can put an alert if you do that for your trading at around 1155. If it breaks that, and especially if it does that on good volumes, then jump in. You can also see this, right? So sort of a ascending triangle, but again, it's part of a larger pattern of a sideways consolidation. Now, if you look at just this ascending triangle and look at the measuring implications, 1150 to 950, you're talking about a 200 rupee move, and 200 rupee 1350 is back to its old life high, right? So that's really uh, uh, you know uh, interesting, right? All right, so that's another long looking at well, this is why it's important to look at individual stocks. GSK Consumer Products is really doing something very different from obviously all the other FMCG stocks. Quite I was going to say quite bearish. That's actually not what I want to say. It's definitely not as strongly bullish as any of the others that we have seen before. So something, sort of amiss there. But again, the low volumes, the sort of lackluster uh, sentiment in this at this point, it looks like. And I'm just wondering, maybe it comes to somewhere around that level, which is at around 4,950. It is at 5,200 here, or just even 5,000. There could just be a quick buying there, and then it's back to 5,500. So I wouldn't short, but I would watch, put an alert around 5,000 and see what, and then watch the chart again, and then who knows, maybe pick it up. So not as compelling as the other FMCG stocks, but definitely maybe a coming opportunity in the next couple of weeks. Godrej Consumer Products. So I would probably wait and watch on this. There's definitely buying, but there's also some sort of hesitation going on. Not sure what that is all about. All right, so some split happened. This was a 1,700 rupee stock, and now it is 9. Yeah, looks like a split or a bonus. All right. Nothing compelling. Other FMCG stocks were much better in terms of technical setups. Here's another one, Marico, right? As again, sort of consolidated for about 2 years in the short term, definitely accumulation going on. And once it breaks 335, then 350, 400 could definitely happen. Right, PGHH, I think that's Procter and Gamble. So that's clearly broken out. Uh, Again, there is quite a bit of, what I call hesitation in some of these moves. So I wouldn't be too keen to get in low volume, but suddenly these are the ones, if you have the bandwidth to keep a track on, will suddenly move. It's tough to say when, or when they do, maybe comes a little bit down to about 8,100 or 8,050, then maybe an opportunity to buy. Nothing compelling right now. UBL, let's move on. Really doing nothing, consolidating, as you can see, for 3-4 years. If you want and it comes to around 680, you could maybe think about buying it, but actually McDowell also nothing. In Petro, right? So this is really something that has again broken out of its life high at around 390. Really good volumes, as you can see, right? Did a bit of a correction and then again went off. It went to 500 psychological mark, right? So this is how these numbers become so important. Went to 500, may come back down to 430 at some point, but wouldn't bet on it. No MACD crossover happening. You could wait a bit. Maybe it'll come to around 440, 450. It's at 460 right now, and then you can buy it, or just put a limit order there to buy it at around 450. Another one at around 430, and then be very patient for it to turn back up. Right. All right. Uh, NHPC Hydropower Corporation, really a stock that it's there on the list, but I'm not sure how great it is to track it or watch it, so giving it a pass. Oil India Limited, right? So big, correction on both ONGC and oil in the last 2 years, almost lost half their price, and now this seems to, really be on a recovery path, going up nicely. You can definitely go long on this with the stop loss on 290, definitely around 284, and once it clears 340, okay, once it clears 340, then 400 is definitely happening, right? All right. Petronet, all right, so this is coming to its life high, and again, after it broke out of its old life high 140, it's gone to 240 in about 2 years now, consolidating and waiting and wondering what to do next. This is not a very great flag, but yes, it is a flag conservatively from say 205 to 230. So that's 25 rupees. A breakout from 225 to 250 is on the cards. May take a couple of weeks, but 250 on Petronet is definitely there. And if it breaks down, then yeah, 210 to 215 or something would be the stop loss. Right. All right. So that's Petronet. Coming now to the public sector banks. So there is PNB in. So I really wouldn't go after this. I wouldn't even bother tracking it. I want to do public sector banks, do State Bank of India, Bank of Baroda, and that's it. Really no need to, I think, get into much more. And this is, like we said, all bearish, the PSU banks mostly. And what's, I think, important is to keep in mind one fundamental risk, which is the government may announce a package, a rescue, a bailout, a consolidation, a merger, a spin-off into a ARC, asset reconstruction company, etc. Right, and that could all just suddenly move the stock this way or that, or there could be some bad news that comes out, and that bad news is just going to pummel the stock down. So for those two reasons of this uncertainty, I would just sort of want to stay away. Bajaj Finance, private NBFCs, so this has just been going strength to strength, strength to strength, strength to strength. Look at the sort of, almost secular uptrend which is there for, if you want to say, from 2008-9 when the stock was 30 rupees, and today this stock is 1900 rupees. What a multi-bagger on the spot market. And looks like it's still going up, right? 2000 psychological mark has come. It may come back to 1.7. It not may, it will come back to 1.7 at some point. It'll also come back to 1.4 at some time and test its previous life high, and then go up probably after that. But if you are a long-term person, then this is looking all really really good, and yeah, one should be in it. Almost 2.5 3,000 could happen. It's already gone from 1.4 to 2,000. That's almost 50% in the last 2 months, right? That's really really fantastic, and more upside technically possible. Though I did see a report about some of these stocks becoming really really expensive. Well, here's another one. So Bajaj Financial Services, more or less going in tandem with Bajaj Finance. So 4,700 to 5,600, also looking like a flag. Good buying, really really good strong volume buying. So it's gone from 4.3 to 5.6, and then 6,000, 6.5 definitely on the cards in the coming weeks. All right, what happened here? Oops, okay. ICICI Pro Life, really no call. It's made a life high there, did a correction, and could be turning around. I think there was an IPO for ICICI Lombard which was filed for, and but this is at a good moving average support, 50-day. Very unlikely to break this, I think, now, and one could actually get a sort of spike move. Certainly it move up 2 3 4 5%, maybe all the way back to 500. But from a longer term investor's perspective, technically speaking, or trader's perspective, yes, a good place to buy. uh, Trader stop loss below 425, and if when it breaks 500, then this is definitely going 550 600. LIC Housing Finance, that's well, not doing well at all. Though I would hesitate to put a short call on this, or a short view on this. This is right now here, and could be a place of support, but the May, June, July up move happened on considerably low volumes. Not sure what's going on. Leave it. If it's not a great obvious trade or position or setup, don't get in. So moving on, PFC, Power Finance Corporation of India. So stuck, in a multi-year range-bound market. So okay for a trader, definitely not for an investor. Really wouldn't want to take a view on this, simply because there's so many others, like in the FMCG pack, or Ashok Leland for that matter, which really really have a nice sweet setup. So why look anywhere else? REC Limited. Uh, hmm, yeah, this is at 163. Mm-hmm. Definitely a bullish, nice bullish divergence there on MACD. And it's not yet maybe time to buy. The weekly ones are not showing anything great right now, but it still A patient trader could buy it here. Really good stop loss is only below 148, but if you're on a tight one, you can make it below 154. And if it breaks out and it goes above 174, then very quickly 200 and 220 next. Right, that's REC Limited. Shriram Transport Finance. So that's been, really after doing a spectacular run from 2008-9 till 2014, it has sort of got stuck at 1200, 1300. But just thinking out aloud, and nothing technical about this, if the transport sector is reviving, if the infrastructure sector, realty sector, capital goods sector is reviving, then it's just a matter of time that you need more trucks, you need more heavy equipment, and these guys basically specialize in that, transport finance. So fundamentally things could be moving around, and if you look at the more recent things, you can see the strong buying in July, then something really smashed it down, then again some buying in late July, and again there's some buying happening here in September. So this could again get smashed down, but for a patient trader investor could buy, 1200 happens, great, then 1300 breaks, then 1500 will easily happen. That's a double top that will get broken. Coming to capital goods and heavy engineering, etc. ABB. So you remember that we saw L&T earlier. This is another stock like ABB which has not broken its 2008 peak. Right, so that way a massive laggard in terms of the markets. The entire capital goods space has been, but they have done relatively well in the last. I mean, after recovering from their lows, 2 years of consolidation, and again, I'm just speculating if the economy is, I wouldn't say revived. It's not, but at some point the bad news gets over and things do start to look up. If that is the case, then many of these stocks you'll be looking at them 6 months, 1 year later, and uh, really be surprised at to how much they have moved. So, with that in mind, just thinking out aloud, and from a trading perspective, yeah, you could trade this with a tight stop loss below 1295. See how 1300 became a good support. Yeah. And once it breaks 1396, 1400, then suddenly 50, 100 rupees could easily happen. So from where it is right now, 150, 200 rupee up move I think is possible. Good low risk trade with a stop loss below 1285, etc. And if 1400 breaks, then 1516. Right. Okay. That's some. If you heard all that quang quang noise, that's some procession going out on the road. All right. So coming to BEL, Bharat Electronics. So that did do a breakout, but the big lesson is in this. 2015 did nothing, and then from 141 went to 188 in about 4 months. That's about 40%. If one can track, alert, and find these opportunities, and that's the sort of stuff that can be done. Of course, doing it is much tougher than talking about it. It's come back to 188, may go to 180. Once it breaks 200, then we'll probably see a sharper move. But in terms of setup, it's okay, but nothing compelling, right? BHEL. So this is one of the companies which is under the Ministry of Defense, Government of India, and with this push on privatization, of opening up of the defense sector for the private companies. So Kalyani Group, Bharat Forge, etc., is a contender to take over some of this BHEL stake. No, BHEL, not BHEL, sorry. BHEL, yes, I think, no. Sorry. I'm getting confused with BEML, I think. Right, that's one Ministry of Defense, right? But VHEL, right? So that was mix up, sorry, and nothing compelling here. So I would just let this pass, neither technically or, and I'm not aware of anything fundamentally which would be really compelling. Okay, right, here's something interesting. We may be, not maybe, we are, but timing it is going to be tough. And that is definitely have a bullish divergence there. So this might, for all you know, come down to about 125, sort of one psychological number, and then suddenly move up. Only thing is all those long-term moving averages, which are strong resistances, but it could move up and then it moves out 150, then 175 is definitely a distinct possibility on BHEL. Right. All right. Cummins India, engines, etc., consolidating, nothing particular in terms of, like an opportunity next week. Can't say. Consolidating, the only thing with these sort of setups is you don't know when they will move. So you just have to take your call. And my call would be on the long side only, given what we are seeing. So anybody who wants to take a shot at it, yeah, sure, go ahead long at around 920. A really good stop loss is a little far. It's around 865, so that's quite a bit in terms of percentage. But on the upside, if it breaks 950, then easily I think 1000, 1025 is happening. On the other hand, if it comes around 880, then that's another good place to potentially enter. Right. Siemens, right, just like the whole other set of, I think, capital goods companies, really nothing compelling. Consolidating, will break out at some point. Thing is, you put your money in these sort of setups, then you generally have a long waiting period, and money is really not doing anything. So it'll make money eventually, but it's not efficient, right? So having said that, could be a potential trading setup here with a nice tight stop loss around 1235, right? And that's not intentional, it's 1235, and it just has to break 1325, and then suddenly 14, maybe even 144, 1450, and you'd want to probably take some profits off at that time, unless there's some really high volume compelling stuff to say that it's likely to break the 1500 mark. But yes, if it does break the 1500 mark, or rather when it does break the 1500 mark, that will definitely be a good place to buy. It's basically a 2-year sideways consolidation, as you can see, and it's more or less rectangle. So easily, even if you be a little conservative and just say it's there, that's a rectangle from about 1500 to 1000. 100, let's say 400 rupees, 1500 plus 400 rupees, 1900 rupees, say 2000 rupees, that's 30%. And that 30% will happen in 6 months or less, right? Is something to really think about, right? So Siemens is a good longer term opportunity, maybe a trade setup short term next week. All right. OFSS, IT space, really nothing. Again, this is just consolidating. So let it move and we'll see. But it could also be at a place where a trading move may happen. No, it's okay, leave it. Okay. All right, coming to metals, because that was one space that was really doing well. So this is the Hindustan Zinc, and after breaking out of 200 in April 2016, this stock is at 300 now, and looks like it'll go higher. No bearish divergence. It has actually made a new life high, right? It'll probably come back to 300, and that will be a good place to pick it up. It's at 304. Be patient, put a stop loss below 293, 291. If you're a short-term trader, and just hold on to this, could easily go to 330, 350. This stock has done really well. JSW Steel, right? After moving out from 215, it has done 260. Good green volumes, good MACD, RSI, everything looking quite in its favor. Maybe a little overbought, right? Overbought in the sense as not technically gone up too fast too soon, sort of picture. But anyhow, right? I would. There's no weekly correction. Also, I would wait for correction to happen. We're now getting some shooting stars, small ones. I would say if and when it comes to this level, that's 235 is when I would want to perhaps look at buying it right now. Maybe it's probably already run up, right? NMDC, National Mineral Development Corporation of India, iron ore and things like that. Again, long term stuck. And this is the thing. So many of the PSU companies will be like this, right? Good businesses, good probably long term future, but inefficient, not healthy on margins, etc. And then just languish like this, and then you really wonder whether you want to trade or invest in these. And my view is you find much better ones set up chart wise, technical, fundamental wise, business wise, management wise, etc. So why bother with such sale, right? So if you look at sale, big huge laggard, right? One of the largest steel producers in the country, but in terms of stock performance, pretty lackluster, right? uh, just to You saw JSW Steel earlier, just to put Tata Steel, right? See how that's done, right? Looking at Tata Steel, like all the other metal stocks, it's just run up, run up. Only today we got us all shooting star, but went from 575 to 655 in about 1.5 months. We'll probably go to 680 also, right? So you see these sort of private sector players, and you wonder why you want to be in the um, public sector. So JSW Steel there again for you, and then this is SAIL, right? So SAIL, a big, massive laggard. Uh, this whole year, sort of consolidating between 65 and 70. Yes, one day it will, break out, but perhaps the better, much better way if you want to do SAIL is put an alert at around 58 and 56. If it comes there, buy it. Otherwise, leave it. On the other hand, there's also this thing that maybe around 65, if it breaks out, then it'll go to 68, 70, right? But it's a it's a dicey one. Much better is something like this, Vedanta, VEDL, and uh, one stock that I traded 2 months back, made some good money, and then sort of forgot about it. That's a stupid bummer thing, because it broke 300, went to 330 now, 10%, and then now it is sitting at its 4 year, or even from 2011 5 6 year resistance, and from here it will gradually climb to 480, slowly, gradually, and all that, right? And at this point, probably not wanting to get in a hurry, wait for a correction to happen and then get into VEDL. But if you look at it from a weekly perspective, last 2 weeks it's gone from 300 to 330. That's a 10% move, which is really, really great, right? Okay, so that's VEDL. Probably run away a bit. I would prefer to wait for a correction and then go long on this at some point, right? So it's stocks like these which are coming to their multi-year resistances, which are telling the metal index what it is telling us, as we saw in the first IMR. Uh, Kerala Healthcare, Pharma, all very iffy, but this is definitely one of the much better performers. But a lot of volatility, as you can see, a lot of event risk, policy announcements, who knows? So uh, let's not even think about it. Divi's Lab. So here is, where definitely some sort of bottoming out could be happening. Stock which has 1400 is now 675. So basically has lost, half of its valuation, come to a 4 year support. Let's look at it from a longer term perspective. There you have the uh, weekly chart. It's come to sort of 4 5 year support zone, bounced off very nicely, bullish engulfing, massive bullish engulfing there, and good volumes when that happened. So initially there was a huge massive sell-off, some announcement if I remember correct, bullish engulfing, move up, test, and this could, if you want to take something which has been hammered down, you can also see the sort of very vague head and shoulder bottom in a sense which is there, and this is slowly trying to climb its way out. And if we look at the volume indicators, you know, uh, nothing to add or minus, I would say. So let's leave it. Yeah, nothing to add or minus. They're not confirming, or they are more or less in sync. Right? I was just wondering whether long term we could identify accumulation. I can't. But yeah, could be bottom fishing. 700 psychological mark, lots of moving averages there. Can put a stop loss around 660, 658. If it breaks 750, 770, then 900 is definitely a distinct possibility. So that is Divi's lab. Glaxo sort of doing a similar picture. So this is what I was talking about. When we do the deep FA review, we look at this space in great detail fundamentally. This could be after a lot of these stocks have lost 40 to 60% of their prices in the last few months or 2 years tops. This could be a place which is turning around for the longer term, and we can't say that from the chart. I mean, in terms of fundamentals or business, when we do the deep FA review of pharma, we'll address that possibility. Here's one thing: double bottom, right, at around 2350, right, 2350, and definitely on then this is a weekly chart. You have bullish divergences, right? So double bottom, I would say, pretty well established since it's a weekly chart with a massive hammer there also. Uh, Not that it can't go down, but I think it's unlikely. And for those who are willing to hold on to this for a longer period, then this could give you some decent returns. 2,400. It may languish here for weeks or months. Big challenge will be for it to break 25, 2,600. But after it does that, 3,000, 3,200, I think is very distinctly possible. It also come to a 2011 support here. Right, so 6, 7 year support. If it goes back up from here 2.5 to 3, you're talking about a 20% return. Let it take 1 year. If one has the courage to maybe roll over futures, then this is definitely something to worth considering. Well, here's something which is doing exactly the opposite. Glenmark broke support. That's why it's important to have stop losses. Right, broke support 550, I think, next. So the worst for Glenmark is definitely not over. Uh, what you could probably do is, okay, I was wondering whether that was going to hold. That's also gone. So maybe that's where probably the next support is 520. So no long, no short. It's already fallen. Alert at around 520 and 520, 525, and then we can review it later. But right now, looks like the breakdown, just further breakdown happened today, and lower levels are possible. So if you're looking for a short, yeah, this is one. Stop loss around 610, 612, 550 would be the next target, then maybe lower also. Pyramid Enterprises Limited. So this is another one which has done really well, doing exactly the opposite of all the other pharma stocks. 1,000 rupee stock became 2,700 in 2016, as you can see. And now, is it doing a rounding top or is it a consolidation? Right, moot question. Looks like a consolidation, but it could also be a rounding top. And if it breaks down below, if it does break down below 2580, one should definitely short it. Otherwise, 3000 is definitely a possibility on it. Torrent Pharma, again, looking iffy. Has come there, no doubt about it, but yeah, no reason to really look at it when we've got much better setups. Moving on, Container Corporation, a unique company, right? So this is clearly now, I think on its way up. Uh, Moved very sharply from 1200 to 1350, and once it breaks 1400, then 1500 is a real possibility. Though, maybe the real opportunity was here when it broke 1250. Having an alert there in place would have given us enough opportunity to take the next 100 rupees and probably further up. Now, the whole dilemma is it's moved. Do I want to get in now? Or as you see in this symmetrical triangle, when it moved out, this was the time to buy at around 1050. You'd be sitting on almost 20-25% by now, right. Anyhow, it's still a buy, and if you are having this, let's say, in your portfolio, you should hold it. Once 1500 breaks, then higher levels. Indigo, so that's been expanding left, right, and center. uh, I guess it's just a matter of time before it breaks 1350, 1400, and then after doing nothing for about 1.5 years, it'll just probably, if it breaks 1400 on good volumes, then 1500, 2000 in a year or two. But as a trade, nothing compelling. As an investment, maybe. Idea, I don't know what happened to that Vodafone Idea merger. It was all approved, is what I know of last, and then just seemed to have gotten stuck after that. Just event after event. So this is a pass. Havels, so consolidating, right? And nothing compelling again. No reason to buy it exactly here at around 450 if it comes, 445, sorry, 450, 455, 460. It could be a good trading opportunity. It's definitely consolidating. You can see the volume coming down. Just a matter of time before it breaks 500, 520, and then we'll see another, you know, move suddenly that will erupt. Right. Once it breaks 520, then 550, 600. Titan, I don't know whether it's the festive season, so this stock has, gone back to its old habit of creating life highs after life highs. So this is where it is. It goes up, goes to sleep for a few months, few weeks, and then again wakes up like Kumbhakarna, right? So eventually 1,000 rupee stock, that's for sure. And with festive season coming, there might be a kicker for it in terms of sales, profits. Probably the most profitable quarter for a company like Titan is ahead, and uh, with all that maybe demonetization and GST thing, all sort of any disruptions of that sort of having settled down, this could really be a stock that moves in the coming weeks. That's just a fundamental view. Technically, yeah, one could buy it. Stop loss below 595 and 650, 700, 700 coming. UPL, no comment, sideways, as you can very clearly see. Let it decide, then we'll see. And then finally Pidilite, has broken out at about 840. Very slow, steady, gradual. Could explode, may not, tough to say. So really not taking any call on this. But yeah, for a long term as in 6 month, 1 year investor, the stock could easily go to 1,000 rupees. That's easily 12-15% higher from here, right? All right, so that brings us to the end of the Nifty 50 stocks, and we will close the IMR 2 part 2 here. Couple of things, observations from my end. Did not find a single good shot, right? Overwhelming longs in all sectors of the Nifty Next 50, including things like pharma, which, like I said in part one, whether it's bottoming out or fundamentally we don't know. We'll do that in the deep FA, but uh, nothing bearish at all. I'm sure we'll find bearish opportunities in the large cap and the Nifty stocks if we do find. But this review clearly shows that for those of us who like, or not for, but the mid cap stocks in just about every sector are all healthy on the long side technically. And again, like I said, not a single short opportunity. So the Nifty definitely not being representative of the wider market. It's doing its own thing. The market is definitely divided into large caps and small caps, and becomes a very stock specific market. So it'd be in each one's interest to actually look at individual stocks and take a call. The sector index also itself could be potentially at the superficial level deceptive. Like you saw autos and pharma doing sector wise badly, but here we found Ashok Leland and almost all the pharma stocks except Glenmark mid cap space to be longs, right? So very stock specific, but nevertheless some excellent opportunities and setups which are there, right? So great. So with that, coming to the end of this IMR, I hope it was useful. Just a reminder again that to look out for the announcement of the deep FA review. We will start that soon. It will happen in several sessions, and it's been a fantastic actionable analysis last 2 years. On the spot, people have made 300%, just holding it for a year or two. So I do invite you to look up, keep a watch out for those sessions, and if you are interested, you'd be most welcome to join that. So announcement coming up soon on that. Till then, I hope this IMR gives us plenty of opportunity for the coming week. Have a good weekend, and hope you make at least some and perhaps a lot of money in the coming 1 week, 1 month. Right? Thank you, and see you in the next IMR. Bye.